Yeah.
An ounce of gold today is the same ounce it was 50 years ago, 100 years ago, and the same ounce it's going to be in 50 or 100 years in the future. Gold doesn't change. Silver doesn't change. What changes is how you measure it. And I just talked about this yesterday on an interview. Gold and silver are measured in dollars or in euros or in yen or whatever. They're measured in the currencies. When the reality is the currencies originally were derivatives of gold and of silver.
Right.
I mean, look at the names of the currencies: the pound, the lira, the peso. It all has to do with weight, the weight of gold or the weight of
Hmm.
silver. The paper currencies were derivatives. And as such, the reality is they should be measured in gold or silver. Gold and silver should not be measured in currencies.
Bill, let's tackle what's on every gold and silver stacker's mind right now. Are we getting close to a bottom here? How much lower can it go? Gold briefly broke below 4,000 the other day. It's north of 4,000 now, but right on the verge of breaking down below it. Silver also broke down below 60, currently trading at 58 spot market. What are we to anticipate from this?
Yeah, I think we're in the bottoming process. Uh, and we hit these levels. This is, I think, the third time now that we've hit 57, 58 on silver and 4,000 in gold and briefly under that. So I think we're in the process of bottoming. That doesn't mean that we can't see maybe $3,500 gold or $50 silver. Um, I think the likelihood of that is it, it's it's not a big probability, and I do think that once these do turn, um, I I think it's going to be a big move to the upside. And as we were talking about before the call, I just you have to look at the big picture. And the big picture is the issuer of the world's reserve currency that everything's based on. That's the foundation. Treasuries are basically the foundation for the world's financial system. There's a big problem.
Well, if that's the case, how can prices stay this low for much longer? Is this also just an aspect of the summer as well, seasonally speaking? Don't prices typically come down in the summer too?
Well, seasonally, actually, today's the day, July 15th. Seasonally, you have weakness in gold and silver into the middle of July, and from here going forward, through the remainder of the year, seasonally, gold and silver are strong. So, and that's during a typical year. And like I said, I don't think we're not in a typical anything. We're in uncharted territory. I mean, you've got some big things happening. I mean, look at SpaceX. SpaceX is now under the 135 where it first came out at. Well, worse, the bonds have been crushed. And bonds have gone from, I think the initial yield was 6.5, now they're 7.5. So SpaceX, which was the biggest IPO ever, uh, the bond market is rating their bonds pretty close to junk bonds,
Wow.
if not junk. So I mean, that's big. The fact that the U.S. government is paying 1.5 trillion a year in interest. How long is the world going to allow that to happen? How long is the world going to accept dollars? And the thought process has been in the works for more than 10 years. And just look at the BRICS, and they first started making some rumblings back in 2012, 2014. They're well along the way uh, to launching their currency. And when they launch the currency, it's going to be interesting to see what happens with dollar balances worldwide held by central banks.
So last year, gold started spiking. Actually, started moving upward around the end of 2023, early 2024, I believe, is really when it started its ascent up.
I can give
And
you the month. The month was October 2022. when we stole $300 billion
Yeah.
of Russian reserves. That's when it started moving up.
And interestingly enough, that's when the CPI bottomed, was when gold started to move up. And now we've, there's a bit of a lag when it comes to the CPI and gold. Gold tends to lead the CPI. So you started seeing gold move last year or in the year before as well. Silver moved last year. And then earlier this year, you started seeing the CPI move significantly higher than we had initially anticipated. CPI numbers came out above 5%. PPI numbers came out today above 3%. So we are, although both are lower than expected because of the, um, lowered oil prices because of the ceasefires and, the back and
Right,
forth deals in the Iran war and stuff like that because
right.
of the oil price. But in effect, it's still elevated. It's moving up on higher. So with gold moving down and silver moving down, at least momentarily, is this sending a signal that inflation may be becoming disinflationary? Maybe it's not coming down, but maybe the rate of change of inflation might be coming down here in a bit. Again, we did see lower than expected inflation numbers this month.
Yeah, I'm not so sure that there's that close of a correlation. I mean, you had you had silver go from 35 to 120. You had gold go from what 2,400 to 5,600. There's nothing in CPI that would justify that type of move. But remember, CPI is a made up number. The
Mm-hmm.
CPI number today doesn't even resemble anything near what it did back in 1980, 1985. The way that they calculate CPI, the way they calculate unemployment, the way they calculate everything has been massaged and changed over the years to try to hide what's going on. And if you look at a dictionary, an older dictionary, not a current woke dictionary, you'll get the definition of inflation as the increase in money supply. It's not CPI. CPI is only a measurement.
Right.
That's not inflation. Inflation or deflation is the increase or decrease in money supply.
How can you have a market be this crucial to the economy, be this crucial to the system as a whole, and allow it to crash? In '08, we did see a crash, but then we got bailouts as well. How do we know that things aren't too big to fail? I hate using that term, but that's the way the controllers may, the central planners may see things. We're correct in the sense that there is a bubble, but will it be allowed to be popped?
Uh, okay, let's go back to 2007, 2008. My era was not believing that the central banks of the world would basically make themselves insolvent and blow up their balance sheets to try to save the system. And that's exactly what they did. They were the white knight back then. Now, your question about the current situation, who's going to come in and bail out the essentially uh, bankrupt or insolvent central banks? Who's the white knight this time? The system got much, much bigger. At the same time, the central banks have blown up their balance sheets. So who's going to save the central banks? Who's going to save the sovereign treasuries? Where's the white knight going to come from? I, you know, maybe it's going to come from somewhere, but I don't see it.
Could one road be just the devaluation of the currencies then? Can't they just print themselves out of crisis, but in effect create an inflationary spiral as a result?
Yeah, and you will see stock markets move up. You won't see bond markets move up under that scenario because interest rates will go higher. Um, but what you'll see is you probably see an initial panic. Just look at any hyperinflation throughout history. Look at the stock markets associated with the country that hyperinflated. The stock market crashes, and then all of a sudden it turns around and starts going higher. It goes straight up to the moon, but only half as fast as the currencies go down. So yeah, you don't lose all your purchasing power, but you lose Typically, you lose about 50% of your purchasing power owning stocks in a currency devaluation. The only thing that's going to hold uh, parity will be hard money, gold and silver.
Yeah, so nominally speaking, we could foreseeably see this bubble continue, but in real terms, it may be crashing, but secretly, silently, so to speak.
Correct, and that's already happened. I mean, look at. I'm not saying things are crashing, but if you look at valuations measured in gold, look at the S&P,
Hmm.
the Dow, whatever you want to look at, measured in gold, they're nowhere near new highs.
No, not at all. The high was actually back in 2000 if you measure the S&P in gold.
Right, that's correct. And what that tells you is that gold has done better than the S&P since the year 2000.
An unproductive metal, an unproductive rock was able to perform the S&P.
Yeah, it's a call it a pet rock, call it whatever you want to, and that's the one thing about Warren Buffett I never understood was him saying, it's I forget the exact wording, but he said, you take gold and you put it in the dark, it's not productive, it doesn't produce anything. What good is it? Well, I mean, I would ask, what good is the foundation to your house? Why do you need a foundation?
Hmm. No, but it's just ironic. It's not really, and it's a cliche to say, but it's not really the that gold's going up. It's just the currency going down. Because again,
Gold
why
doesn't
should an
do anything.
unproductive asset outproduce a collection of productive assets in the sense of
Yeah,
the
gold,
market indices?
gold does nothing.
Yeah.
An ounce of gold today is the same ounce it was 50 years ago, 100 years ago, and the same ounce it's going to be in 50 or 100 years in the future. Gold doesn't change. Silver doesn't change. What changes is how you measure it. And I just talked about this yesterday on an interview. Gold and silver are measured in dollars or in euros or in yen or whatever. They're measured in the currencies. When the reality is the currencies originally were derivatives of gold and of silver.
Right.
I mean, look at the names of the currencies: the pound, the lira, the peso. It all has to do with weight, the weight of gold or the weight of
Mm.
silver. The paper currencies were derivatives. And as such, the reality is they should be measured in gold or silver. Gold and silver should not be measured in currencies. I
Are
mean, think
you
about it. You call an ounce of gold $4,000 an ounce, but it's not. The dollar is 1/4,000th of an ounce. And it
yeah,
was, at the turn of the century, it was 1/250th or 1/300th of an ounce. Now it's 1/4,000th of an ounce. And that's just a function of the currencies losing their purchasing power.
yeah, I believe what you're referring to is Exter's pyramid, right? Gold is out here is down here at the foundation. Well, it's
Right,
an inverted
exactly.
triangle, right?
Right.
And then above it you've got
Back
paper
in the
money.
day, yeah, back in the day when he put this together, um, paper money it was interchangeable with gold up until the 1933 or 34, and then in 1971, governments could not interchange dollars with gold when Nixon took us off the gold standard. So there kind of needs to be an update to that uh, to that pyramid.
Yeah. Well, as it stands now, you've got gold down here, and then above it you've got paper money, which derives from gold, and you've got bonds, treasury bills, which derive from paper money, corporate and muni bonds, securitized debt, listed stocks. Those are derived from bonds. Non-monetary commodities, private business, real estate. That's next up on the list, and then unfunded government liabilities at the top.
Yeah, what I'm saying is that paper money and government bonds/treasury bills should be higher up on the pyramid now
Hmm.
because there's more risk.
I see. Should they be above corporate and muni bonds?
Well, actually, all three of them. I didn't see that one yet.
Yeah.
Anything that's debt related has got to go higher up on the. It's got to go higher
Gotcha.
up on a pyramid.
Right.
What kind of risk is there in corn other than a bad crop? What risk is there in oil or copper or what have you?
Right. They actually exist.
Right, something real.
Hmm.
And I wonder where Bitcoin would be on that pyramid.
That is true. Where would you put Bitcoin? Non-monetary commodities? I
I
don't
have no idea. I said that because, in my opinion, I've said this publicly many times. I think Bitcoin and the cryptos are basically digital air. There's a perfect accounting system of nothing.